Corporate finance practice problem using Excel. Annual dividend yield, earnings per share, and price earnings ratio calculations. Get ready. It's time to take our chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab, in essence, being an answer key. We have the information on the left-hand side. We're going to populate that into the blue area on the right-hand side. Information has the market price. And remember that the market price, when we think about these types of problems, clearly is not something on the financial statements themselves, but something determined by the market. If you're talking about a publicly traded company, then you should have the readily available market price. We're going to say the dividends per share is going to be $3, and the payout ratio is 0.5 or 50%. So in other words, we're thinking the payout ratio, taking the earnings that would be earned over a period of time, say a year, and that's the amount that would be paying out in the form of dividends. So let's think about the dividend yield then. If we consider the dividend yield, the yield over, in essence, a year, what's going to be the return? We can take then the dividends per share, which is going to be 3 at the dividends per share, and compare that then to the market price, what the dividend might be purchased for, and that's at the 95. Let's go ahead and underline that by going to the font group and underline. This will give us the annual dividend yield. This will be equal to the 3 divided by the 95. And let's make that a percent by going to the percent number group and then percent. We'll add a couple decimals. We're at the 3.16 on the annual dividend yield. Now, clearly, of course, the dividends could change. Policy could change over time. So this is going to give us that annual dividend yield calculation, which could help us with our comparisons and whatnot for it to see what the best return we could have on it could be. So now let's take a look at the earnings per share calculation. So we could think of the earnings per share as taking the dividends per share. Let's think about it this way first. Normally, oftentimes, you might first think about the payout ratio. So they gave us the payout ratio, and the earnings per share, if you were to think about the earnings per share, you'd probably first say, okay, normally I would take the earnings divided by the number of shares, but I don't have the earnings, and so I don't have the information to do that. So what I do have is the payout ratio, and so then you might say, okay, well, what is the payout ratio consisting of? It's going to be the dividends. We've got the dividends compared to the earnings would basically be the payout ratio. We can think about that with regards to dividends in aggregate compared to the earnings in aggregate, basically net income, or on a per unit basis as we have here, because that's the point of us having these standardized kind of units. So here we've got the per unit information. We could take the dividends per share, which is going to be the 3, and we could write this out algebraically, like horizontally, or you could put it into a nice little table here and basically back into then to the unknown. I'm going to pick up then the 3. The thing that we do not know is the earnings per share. So I'm going to say earnings per share. And I'm going to make that yellow. That's going to basically be the unknown. That's what we're kind of backing into here. We do know the payout ratio, which they gave us at the 0.5. So we got the 0.5 on the payout ratio. Let's add decimals there. Number group, adding a couple decimals. So if we have the 3 divided by something gets to the 0.5, we can then back into the unknown number. It should be the 3 up here divided by the 0.5, and that's going to give us our 6. We can double check that by then running this back. The normal calculation, this would be 3 divided by 6, which should, of course, give us back to that 0.5. Let's go ahead and add some decimals there. I'll add decimals to this whole thing. 3, let's make it blue. Let's go ahead and put some borders around that one. So there we have it here. Now, you might think of that kind of calculation horizontally, just writing it down algebraically, writing out your payout ratio and then backing into the unknown. The point is that you may do it this way instead of kind of thinking about a different formula that you might use if you're first thinking of the payout ratio. You want to understand the relationship between the different formulas and not feel that you really have to memorize every formula every way. It could be rewritten algebraically when you're working. That's a general rule when working about these types of problems. And the more you can see the unknowns or basically rework or format the problems in different ways, the less rigid your mind is and the more flexible you can see how things are related, the better you're understanding things and the more productive and, creative you could basically be with regards to these things. So then we could do it this way. If we reformat it this way, we could say the dividends are going to be 3 on the dividends, and then the payout ratio. The payout ratio is going to be the 50%. If we just rewrite this, 50%, and let's make that adding a couple decimals, underlining it, font group and underline, and that once again is going to give us our earnings per share, which is going to be equal to the 3 divided by 6. And there we have our 6 again. Now, again, you might say if you look at this in a book problem or something like that, they're probably just going to give you this kind of calculation here, making you think that you kind of have to memorize this as a separate formula. But remember that may not necessarily be the case. And even if it were the case, what you really want to do is you might be able to see, in other words, the payout ratio, see the unknown in it, and then solve for it algebraically. And then, possibly that can help you to lead into being able to see the algebra being formatted this way. But you don't want to think of it as these completely separate things that you have to memorize, basically separate formulas. In general, you'd like to see them all, how they're all kind of connected together. So we got the price earnings ratio. So we can pick up the PE ratio, the price earnings ratio, by picking up the market price. So we'll pick up the market price. This is something not on the financial statements, you will recall. That's going to be at the 95. We're going to compare that to the earnings that we just calculated up top at the $6. Let's put an underline there by going to the font group and underline. This is going to be then our price earnings ratio, or the PE ratio. So we're going to take the price at the 95 divided by the earnings, and that means we'd have the 16 about, adding a couple decimals, number group, couple decimals, otherwise known or closer to being the 15.83 times earnings could be earned on a per share basis before you hit basically the market price, which could be another kind of comparison calculation we may be using when we're thinking about different types of stocks and investments.